Okay guys, we will be live streaming soon. So let's look at the disclaimer. Okay, so let's bring the charts. Okay, 1 second. Yep. Okay, so let's jump into the charts soon. Okay guys, it's coming. Hold on. Right. Where are the charts? Here they are. This is what we all need. The charts, live charts. So we are back with the live charts. Okay, so what's happening today in the market? Right, at the moment, I will just show buyers are pushing the price up. Let's start with that. Okay, so the buyers are pushing the price up because we have a weak US dollar. So we got a strong, due to that, we got a strong Euro FX. So you can see the price is shooting up, right? And you can see aggressive buyers are very dominant. Look at this column over here, right? So aggressive buyers are controlling the market, and you can see passive sellers are backing down with negative values. So that's a clear sign of aggressive buying happening. So why aggressive buying happening is because, as I said earlier, the market sentiment fundamental is we got a weak US dollar. So because of that, we got a strong Euro FX futures, and according to fundamentals, we got a strong micro E-mini Nasdaq index futures, and we got the E-mini S&P. So they all are strong, but the GBP also should be strong, GBP futures, but due to UK economic reasons, it's weak. So that's where we start with the fundamentals. Now, when we see it's pushing hardly, price is pushing up. So we were expecting for a retracement to catch the price over here. However, it did not retrace, but we had a buy limit placed, for that reason. But you can see the market did not come down because it's mainly because of weak US dollar. So because of that, it's very strong. The market is Euro FX futures is very strong, right? So what's happening now? Okay, so while the market is doing what it wants to do, right, we can talk a bit of analysis, like coming into this. But because the current live situation is price pushing up, we can just see to the left of this, right, over here. So let's put a line first. Okay, so let's draw a horizontal line so that we can easily check it, right? So let's put the horizontal line over here, and Okay, so let's change its color into yellow. So basically what I want to do is I just want to go to the left of the chart and see if there is any high volume cluster in this area. So that's why I just put the yellow color line. So over here, so this is what I can see. So I can see a strong price push down towards the left of the current price. Okay, so I'm talking towards the left of the current price, and let me do one other thing. Let me also, currently, if you look at today's fundamentals, there's no major red news today. Today is Wednesday 6th, and the current time is New York time. Okay, let me read out the time as well. I'm also, if you look at the trading view charts, at the moment I was showing you the 8 hours charts, but if I look at the trading view charts as well over here, and we were looking at over here. Okay, this is the trading view charts, and just to look at the time, so it's currently 8:58 New York time, live at this stage, 8:58 New York time. Now I will just move this chart away, and as you saw, there's no red news today. So when there's no red news, sometimes we expect a quiet market. However, you can see the price is strongly pushing up, right? So it can happen. That's mainly that's how the market can behave, right? So what I see, what I'm checking is to the left of the chart, I'm checking if there's any high volume cluster. So you can see the price was continuously in a downtrend all the way down. So for that full downtrend leg, if I draw a fixed range volume profile from here to here into the downtrend, you can see in that yellow color area, you can see there's a high volume cluster in this whole downtrend. So the high volume, see the high volume cluster is here, then you can see another high volume cluster here. So there's a chance where the price could, although the price is shooting up, there's a chance where the price could react to this high volume cluster and come down. So if I go to the price one more time, okay, so as you can see, the price has a reaction, right? See, now there are wicks are forming, so there's a reaction, and you can see sellers have aggressive sellers have traded over here, whereas until up to this point there were aggressive buyers, but now you can see aggressive sellers has started trading. So it's possibly because of that reason I showed you. So if I go to the left of the chart, right, so like this, and I'm just following the yellow line, okay, right? So yeah, it's again, I'm coming to the same place where I was earlier. So you can see, if you look at this as a high volume cluster, so that's why possibly the price reacted here, right? Now we have an idea why the price reacted, and also we can see a bearish fair value gap over here. So this is a few days ago. How many days ago? Roughly couple of days ago, right? So if I just count 1, 2, 3, 4, 5, well, let me count again. So 1, 2, 3, 4. Let's say 3, 4, 5, 6, 7, around 1 week ago, okay, roughly 7 days ago, where this high volume cluster formed. So the price just now reacted to that. So now there's a chance where the price could make a retracement. I mean, there's a chance, okay. Price can do whatever the price wants. That is very important for all of us to keep in mind. Even though there's a chance of a what do you call retracement now, even though there's a chance, price can do whatever price wants. Now that is something very important for you to understand Okay, so what's this 1.1620? I just want to move this a bit to 16. Wait, guys. So yeah, I just moved it a little bit away. So we had a limit order place. I will cancel it. We were thinking of a retracement, but price shot all the way up when the market started at 8:30. Forex market start time, right? Price shoot up. So because of that, for temporarily we will cancel this order. We will leave it, but basically now we are focusing on this area, right? So that's why I just moved this away as well. Let me move it a little further away. So these sessions will help you a lot to understand how to analyze the live market, and how to, basically what we are showing you now is how to adapt yourself into this live market changes or reactions, right? So now when I push it over here, like when I draw the volume profile, you can see over here there's a volume cluster, but compared to this is a very strong high volume cluster, whereas this one is also a high volume cluster, but compared to this one, it's not a very high volume cluster. Now why is this a very high volume cluster? That is because there was a huge range build up, right, for many hours. So that's why it's very strong. Now looking at this, if I just consider only this price leg up, if I just draw a volume profile for that part from here to here, okay, for the current price push up, for that part you can see the volume point of control is over here. I mean for this price push up, okay. So if I look into this, so this part, the price pushed up, kind of retraced in and made a range. However, you can see in that range the price pushed up slightly, pushed up, made a slight higher high, however pushed down, retrace, right? So if I consider that part like a push up, retrace, push up, retrace, push up, so if I just draw the volume profile over here, you can see for that part, that high volume cluster looks equal, somewhat similar. This, so compared to this high volume cluster over here, this is also comparatively a high volume cluster. Okay, so now considering that fact, considering this as a push up, then over here there is a possibility where when the price retraces down for a quick reaction from over here. So what I mean is, so if I put a long position over here, right, okay, so what are these, and it has made bullish fair value gaps as well over here, right? So I'm just looking at what the price has done in the recent past. Okay, let's look. So basically what I'm analyzing currently is, if this is a high volume cluster, I will just place the entry here. We are not going to finalize the entry, but what I'm telling is, if I just roughly put around 10 ticks of stop loss, right, there's a chance of a reaction here. Okay, so 1 to like 10 ticks. In the meantime, let's also look at the smart DOM. You can see over here the sellers are pushing, right, the price, aggressive sellers. Now what's happening is, there's a reaction for that leftmost high volume cluster. So like 1 week ago, that's reaction is here. And okay, so now let's just think a bit. So let's see in this high volume cluster area, let's put another yellow line, like a horizontal line, just to see if there is any like a resistance being broken in this area. Okay, so let's put it also like a yellow color line. Okay, and then let's just move to the left and see if there is any resistance being formed in that area. Okay, so in that yellow color line. Okay, so if you look here, that lower yellow line, you can see there is some slight price reaction to that. If you look carefully, right, to the left, let's go further to the left and see. You can see in that yellow line there is some price reaction to that price point. See over here, over here, over here. So we are just checking if that line is kind of acting like support. Now you can see if I go further to the left, that line I draw now is kind of acting as support. Then if you have to be careful because there are two yellow lines, so I'm referring to the second yellow line at the bottom. So let's go and see, not the first one, the second one. You can see to the second one there's a reaction. See, there's a reaction. So the support broken, and now it's here, it's working as resistance, that second yellow line. And then you can see there is a minor reaction here for that. And now if I come over here, I can see there has been, yes, so to that yellow line, we can see there has been a reaction even here. So which means that support is broken into this support over here. I'm sorry, now here it's resistance, right? So the resistance is broken with this price push up, and now there is here, right? So which means there is a chance where the price could retrace into this area and make a quick shoot up, right, into this area, because this is where, you know, the price pushed up, then it acts as a resistance, then slightly retrace, like meaning not a big retracement but resistance, and then all of a sudden it's broken. Now if we think like that, okay, I will just show you. So if we think like that, and if I think of a long position in that area, support broken resistance, so basically then the idea is this high volume cluster, you can see over here. So to place the trade at the beginning, like at the top beginning in that high volume cluster, considering this resistance line, meaning broken up, now it can act as support. And then looking at this high volume cluster over here, then at the very beginning, starting point of the high volume cluster, let's also look at the smart DOM to see what's happening. You can see aggressive buying happening again. Okay, so that's what the price is shooting up, aggressive buying happening. So in the smart DOM, so if I look into this, see, that's why the price is pushing up. Okay, now so we need to adapt, as traders, we need to adapt to the live market. So basically what's happening is, if I consider that, and if I just, now we are just trying to analyze the market. Okay, so if I place a long entry, for that reason, if I place a long entry over here, one second, let's hold on, let's delete that. Let's move this one. How much? This is one. We just place it here, right? We'll keep all these. How much is that? Enterprise 1637. 1637. Yeah, 16. So let's move it. So these are just analysis. Okay, 1637. Right. Now price is shooting up, but considering this resistance broken now, possibly of acting as a support, and this high volume cluster over here. So if the price retrace, we can expect a reaction when the price retrace. We can expect a reaction to this high volume cluster, to the beginning of this high volume cluster, which is this one, and to this support line now, because it's, so if I look into that, and you can see there's a fair value gap here, 30-minute FVG. So if I place the trade towards the bottom end of the fair value gap, right over here. Okay, so then then we have to look where the stop loss could be placed. So if I just move the price, hold on. Okay, over here. So I will be placing the stop loss towards the bottom end of this high volume cluster, right? Either here or maybe here. So if I place it over here, it's 14 ticks. Then yeah, so if it's like 1-to-1 quick scalp, 30-minute scalp, like a quick take profit, then that it will be over here, 1-to-1, 14 ticks over here and over here, right? Okay, so that's another possibility. So if the price retrace after this, if the price retrace, currently there's still no sign of a retracement. If you look at the smart DOM, you can see aggressive buyers are still pushing the price up, okay, at this point. So you can see aggressive buyers are still working hard. You can see aggressive buyers. Now you can see aggressive sellers have come here, but aggressive buyers are here in this line, the buys over here. Let's see, you can see passive sellers are here, but why the price is pushing up is due to aggressive buyers still working on pushing the price up. Okay, so this is the live market. The New York time is currently 9:15 New York time. Okay, I'm checking a few things, guys. So in a live and streaming, we need to check a few things. What's happening? You can see aggressive sellers are trying to push the price down over here. You can see passive sellers are emerging in comparatively large quantity. So that's why there's a wick being formed. Okay, now you can see the passive sellers are pushing the price, aggressive sellers are pushing the price down. See, with the contracts, so the contracts are increasing in the aggressive sell column. Okay, guys. So that's why there's a wick being formed and the price is coming down. So if the price come down, now if we try to analyze over here, so what could happen? So one possibility is, as said, the price could retrace, one possibility over here, and this support resistance turn into support now, and this high volume cluster, as I said, beginning could be a potential entry point, right? So over here, but then at the beginning of this fair value gap being formed, right? And over here, if not, you could target here, this over somewhere here. That's also okay. Let's also drag this fixed range volume profile to the top so we can see the volume over here. Now, if in that case, if this is the entry price we are targeting, where are we? Here, right? Then how many ticks are there? 17 ticks stop loss. Then for it to be 1-to-1, at least over here, 17 ticks. But then sometimes we also place the buy limit order at the beginning of the fair value gap, okay? Because there's a chance where the price could come to the beginning of the fair value gap as well. Over here, what you see. So fair value gap is a smart money concept. So basically, we for our main analysis, we use volume profile and order flow. But after the main analysis, when it comes to entry points, we will look into fair value gaps, which is a smart money concept, which we have spoken in our other videos. Have a look at the other videos in the channel about that. So, right, so that is the current situation over here. Okay, so let's look at the footprint. The footprint chart, what's happening? You could see some aggressive buying happening, right? See, it's blue in this area, which means the buyers have been dominant. Over here, there's some aggressive selling. However, the price pushed up. And currently, the price is pushing up. You can see there's more buyers. Okay, so basically that is the volume footprint chart, or the footprint chart, right? So now since the price is shooting up, and now due to that, and also looking into, let's take this volume profile, let's draw that as well to the top. So that volume profile I draw is from this price leg, this swing point to this swing point for the whole, considering this as the whole uptrend. So that is what this one is. So if I hide it, you can see. So that I just hide it. So but if I unhide it, you will see I draw it from this swing low into over here for this whole price swing. So if I put it back, right. Then this one over here, if I hide it, that if I unhide it again, so that I draw for this price leg from here, swing for these swing legs from starting from here. That is because, if I put it back, that is because you can see after this range, price slightly pushed up, make a higher high, right, and then retrace and pushed up, retrace, pushed up. So I just want to see how the volume is accumulated. Now if I look at the smart DOM, still aggressive buying happens. See, so more and more aggressive buying. So the price is still showing the signs of pushing up. So overall, as I said, the sentiment is bullish, right? So that's why you see a bullish price move. And why the price is reacting, like why the price is making like a wick at the top over here is, as I said earlier, if you look at this yellow color line, if you go towards the left one more time, if I come over here towards the left, around 7 days from today. If I go back, you can see, as I said earlier, there's a high volume cluster, right, when the price was pushing down. So when the price was pushing down, if it make a high volume cluster, that means there have been sellers here, right? So aggressive sellers. So if the sellers, so basically this is where smart money and big banks have traded, right? That's why you got a high volume cluster. So if smart money and big banks traded, and if, because that caused the price to push down. So when the price today, after 7 days, when the price retrace or come back to that point, because there was a large quantity of selling happening here, that is why there's a chance where the sellers can defend that price point. So if the sellers, if smart money is going to defend that price point, this from this high volume cluster, so when the price come to that price area now, there's a chance where the price can react to that, meaning if sellers are defending, that means price will start coming down again, like a quick reaction from here, like a possible price coming down. So that is what you see currently was happening, the wick over here, right? The wick over here. However, that the sellers defending is not very strong. Meaning, if I look at the smart DOM, I can't see strong sellers. Sometimes you can see strong aggressive sellers coming here, meaning they are defending the price. But we still can't see the price being aggressively defended. How now? But there's another thing which can happen. Now, when the price come here, even though there is aggressive buying, as you can see over here, if you look at these contract numbers, there's more buy contracts. However, you can see the price is not shooting up. Instead of price shooting up, the price has made a wick over here, as you can see. So that could be a possible sign of absorption. So what that means is, even though aggressive absorption means, even though aggressive buyers are trying to push the price up, what you see here is aggressive buyers, but there can be passive sellers defending the price. Passive sellers means limit orders, sell limit orders. So that you can't clearly see here, right? For that you need to get the DOM, right? The full DOM, right? So this is the smart DOM, which shows certain amount of information. But if we go to the DOM, you could also see that those details, which we will show you in future live sessions. We need to gradually build up your knowledge, right? Because if we bring all the tools, it could confuse you, right? So we want to gradually make a gradual build up for you guys. But as you can see, there's a wick being made, which means, see, even though aggressive buyers are there, why the price is not going up is, as I said earlier, it's possible absorption happening by passive sellers, which means, see, that's what most probably happened here. So you see aggressive buying, but price coming down. So which means absorption, which means there are lots of passive sellers defending that price level, which we talked earlier. Now, looking into this, if we quickly look into this and looking into this point, price area. So if the price come down, and if we are to place a trade, now if you look at the stop loss, so if this is the entry, then we got a 17 tick stop loss, which is below this volume cluster over here. Okay, so the daily ATR is around 10 ticks for the Euro FX futures. So Now basically, if I look a little bit here, so now look, now you can see there are signs of absorption and passive sellers silently absorbing all the aggressive buyers, which means that towards the left, that high volume cluster 7 days ago is showing it's like silently defending. So sellers are defending the price. If that is the case, the price can push down. However, then two things could happen. Like if the price come down, one is a possible reaction here, like retrace and a reaction to this, and a quick shoot up, like a quick one to grab a one-to-one trade profit. That is one possibility. However, looking at this price leg, you can see compared to this high volume cluster, this one is like more dominant. So there's a possibility where it could stop loss, meaning if we place an entry here, there's a possibility, because price can do whatever price want. We have to understand that. What we are trying to do is educated probabilistic decision, right? But when you place a trade, it could be a winning trade or a losing trade, right? We have to keep that in mind. So if we place it over here, I'm just checking. Let's check if it's over here. Then where is this stop loss? We said 70. Like if so, it should be like below this, somewhere here, right? And just checking. Okay, so at least to be one-to-one, this should be somewhere here. So one possibility is if we could lower the buy location into the beginning of the fair value gap, and then what could happen is the price may shoot up, without grabbing your entry. So there's two sides always. What I mean is, if I just lower the entry price into the beginning of the fair value gap, okay, like this. So it doesn't matter, even like you can think like that. Even if the price, you miss the trade, there will be another trade, on another occasion. So that's another possibility. Okay, so if that is the case, that is one option. So I'm also looking into what the price is doing. So why is this moving? Okay, so 14 ticks. Let's see. So when I move, sometimes this moves that price as well. So let's check. So if it's over here, if not over here, right? In the middle, let's say somewhere here, in the middle of that 30-minute fair value gap. Then where should this be? This should be here. This is here. 16 tick stop loss over here. So this is one possible entry you could place. The other possibility is the price could come here, as I said, into this, this area where there's. So if we are taking a trade over here, it will be like a quick trade, right? To see if you could quickly grab, entry. So this one over here, just checking. We talked about this earlier, but let's keep it now over here. Let's delete this, what we talked earlier. Now you can see some wicks are being formed. So that means the price could come down and shoot back. So let's place limit order over here. Okay, so that is one possibility. Quick price short. So I'm just analyzing what the price is doing, okay, and I'm looking at the smart DOM as well. Let's see what the price is doing, okay. Let's watch the charts. I'm just checking what the price is doing as well, okay, while I'm doing this. So this is a very strong price point over here because of the huge range and price pushing up, but this is like a mini range being built up where the price could come retrace, make a quick push up, and could retrace further down and grab more entries and could, you know, shoot up. the price is coming down, you guys can see. The price is pushing down, you can see. So we place a quick buy limit order over here at this price point, where the stop loss is over here and the take profit is over here, right? So as I said, what could happen is the price could come, retrace, could react here to this high volume cluster, could push up and even could give you the full profit, right? And that's one possibility. If not, price can, because price can do what price want to do, okay? We can't control. The other option is it could come, take your entry, but it could stop you out and it could go all the way here into this high volume cluster and it could grab this entry where we have placed over here another buy limit order, where the entry price is here at the beginning of this fair value gap and at the beginning of this high volume cluster, and the stop loss is at the bottom end of the high volume cluster over here. And then yeah, we got a stop loss. So we got two entries placed. So let's see what the price wants to do now with those entries. And yeah, you can see the price is pushing down. Then let's look at the smart DOM to see what the smart DOM is telling us. You can see there's more passive sellers. So what happened here is, you can see there's a lot of, over here in this area, a lot of aggressive buyers. Aggressive buyers are more, however, the price came down. So what has happened is absorption, meaning passive sellers, meaning sell limit orders have triggered here. But because they were passive and because aggressive buyers were pushing the price up, what we see in the smart DOM is the aggressive part. We don't see the passive part. So we see the aggressive part. However, the passive sellers, as I said, with sell limit orders have continuously pumped sell limit orders. So then what happens is, then the aggressive buyers will get exhausted and then the price will come down. So that is what you call as absorption. So there's a possible absorption happening here, which is a sign of price, because the price was going up, which is a sign of possible price going down now because of that absorption. And especially because of that 7 days ago, there's a high volume cluster. So those smart money, those sellers defending the price can cause the price to come down. Okay, guys, you can see my negative buyers. So that means the price is pushing down. Now, when we place these limit orders, so we need to manage risk as well. So we put lower risk here because there's a chance where the price could come and stop you and grab this entry. Because as I said, the second entry has a high probability because of the large volume cluster, because this range was built up for many hours, as you can see. So there we could take a little bit of extra risk, whereas this volume cluster just build up over here right? So we put less risk on table onto that, but we put more risk. However, now what are the scenarios? One possibility is price could come, it may not even tag you, it may react to the resistance, turn into support line, and it could go up. So then you will not be in the entry. Other option is it can come down for this bullish fair value gap over here, the green area, right? It could come down. And let me just expand this a little bit. Okay, so this whole area is the bullish fair value gap. So we have placed the entry like in the midway of the bullish fair value gap, right? One possibility is, so normally we place it at the beginning of the fair value gap, but the price is a bit aggressive, and it's fresh and it's aggressive push. However, because the volume cluster just formed, it may come little bit down, so it's okay to keep the entry little bit towards the down bottom end of the fair value gap. Like there's a chance where it could come to the bottom end of the fair value gap because it just formed, right? So it could come to this bottom end of the fair value gap and then push up. So we put it little bit halfway, and then the second scenario is it will come and take your entry and give you a winning trade here. Third, next option is it can grab the entry, go push little bit up, but without giving you the take profit, it could after that retrace down and stop loss you, and then come here into this bullish fair value gap, and then this resistance broken up can now act as a support in this area. So the price could come to that support. That is where we have placed our second limit order. The price could come to that support and push up. Okay. So those are the scenarios, possible scenarios or possibilities. Let me check. If I just draw a support turn into resistance, or resistance and support, that line, let me check. So volume point of control, I'm just looking at the volume profiles. Okay guys, sorry. So if I draw a trend line just to draw the support resistance turn into support line, the SNR line, support and resistance line. So if I just draw and come little bit to the right, yeah, just okay, it's asking whether to cancel, say no, maybe I just clicked something, right? So I just draw that line. So if that is it's a zone, actually support turn into resistance zone, but then our second entry is here. This is the first limit order, second limit order is here. So I'm just checking whether the entry location is okay. So the support turn into resistance, then the high volume cluster here, then at the beginning of the high volume cluster, so somewhere here. I'm just checking the entry locations, okay guys. So over here it looks okay, the entry location, yeah, over here. So I was just double checking, you know, what are the, whether the entry locations are all good, you know. So what's happening in the smart DOM? you can see passive sellers are in the picture, right? However, currently the current 30-minute candle, so we are in the 30-minute chart of Euro FX futures. Okay, 30-minute chart of Euro FX futures. Now the question is, why did we choose Euro FX futures? Why we did not choose the micro E-mini Nasdaq index futures, which is this one, and then micro E-mini S&P, and then GBP futures. Now look at the price action. So look here, if you look at this price action over here this is the Euro FX futures, you can see it's very clean, right? Very clean means you can see a strong push up, retracement, and a range, strongly breaking. You can see a break of structure here, like the price pushing all the way up, break of structure. So this has a clean price action. Do we see that clean price action here? Now, according to the market sentiment, micro E-mini, this is micro E-mini Nasdaq index futures, is bullish. Yeah, the price is pushing up, but do we have a clear market structure? Do we have a clear price action? So why is it bullish? Because it's due to weaker US dollar. But look here at this area in the price action. Look at this price action over here. Though it's bullish, see this area is looks like a more bearish price action. See the price strongly pushing down, retracing, strongly pushing down, and price pushing up. But is it a strong push up? No, right? It's not a strong push up. No, even though it's not strong, it retraces and it's pushing up. Why? Because the underlying market sentiment, fundamentals, according to fundamentals, micro E-mini Nasdaq index futures MNQ is bullish. So that is why its price is not going down because it's bullish, but it's not showing a strong price action. It's not showing a clean market structure where the price is going up. So that is why we did not select MNQ to place a trade now. Then same in MES. MES compared to MNQ, okay, MNQ is bullish. MNQ means micro E-mini Nasdaq index futures. MES means micro E-mini S&P. So MES is also bullish, but compared to MNQ, slightly less bullish according to market sentiment fundamentals. So that's why you can see compared of the two, MNQ is more bullish compared to MES, right? Now, before this live stream, we took a sell entry today, which is a winning trade. So this is that entry which we bank profit, right? That I will explain it in a little while, but let's forget about this for now. You see, we took the entry here and price came and hit our profit target, right? What time was it? It was New York time, 3:30 a.m. That is that New York time 3:30 a.m. means London session, the London Forex session. So during the London Forex session, which is London Open, which is from New York time 2 a.m. to 5 a.m. So this is 3:30 meaning London. So we took a sell entry in the London session. There are reasons for that, which is based on volume profile and order flow. That I will talk a little bit later. But we bank profit, right? After that, we did not take a trade because there's no clean price action for bullishness, because now we are looking for bullish entries. Then this one has a clean price action, as I said. Very cleanly, strong push up, retracement, range and break of structure with strong displacement. Then ranging, volume build up and push up. So it clearly shows bullishness. So this chart is the this chart is the micro Euro FX futures. Micro Euro FX futures. That is cleanly bullish. Because that is cleanly bullish, that is why even it's not retracing at this moment. Because it's very strong bullishness. So it's very strong, the Euro FX futures. So that is why it's making this bullish fair value gaps and price pushing up. Now we have placed buy limit orders expecting for a retracement, because as you all understand, when the price is pushing up, we don't buy, right? We all understand that we have to wait for a retracement for a better discounted price. Smart money concept. So you could see a fair value gap, and that's what we are expecting, waiting for the price to come. So this trade setup, what we have placed the entry here is our volume profile based trend setup. So if you are interested in learning the techniques we use, the trading strategies we use, basically look into the description once we upload this. Once this live stream is over, into the description of this live stream we will put a link where you could get the free course. You don't have to pay anything, where you could understand some of these concepts, right? No credit card access, nothing. Like, it's just we have published it free for you guys, right? So yeah, that is why we are now waiting for a possible potential entry in this market, okay, over here and over here. Then out of all this, if you look at GBP FX futures, which is this chart, GBP or FX should be bullish because the USD is bearish. However, due to underlying UK economic reasons, the GBP FX futures is currently not strongly bullish, and it's bearish actually. Now, yes, the price has pushed up. Yes, that's true. However, according to fundamentals and economic reasons, GBP FX futures is not strongly bullish. As I said, it's rather bearish. Yes, the price has pushed up. That's a different story. Price can do whatever the price want. Okay. So due to all that reasons is why we ended up in placing our trades in micro Euro FX futures. So this trade is based on our, as I said, volume profile based trend setup. Based on that is what we place this trade. Then this trade over here is also based on our volume profile based trend setup. So this one, volume profile based trend setup is for this price action, for this area, based on this price action. Then this trade over here is based on this price action over here. Again, it's our volume profile based trend setup based on that. You could also apply our volume profile based volume accumulation setup over into this area, but we didn't apply it over here, right? So we got couple of trading setups, strategies, right? And if you are interested in learning those, access the free course and start going through that, and then you will get some basic idea first. Okay, so that is mainly what we want to talk with you today. So we have placed our trade entries. So once you place the trade, there's nothing much for us to do. Mainly what we have to do is monitor the trades to see if any of the underlying concepts which were based to place these entries, if they change, then we need to cancel the entries, right? Likewise, so we need to actively manage the trades, okay? At the moment, we don't see a reason of canceling this trade and this trade. We can keep them running. However, if the price stays here for a longer time, which means the acceptance of the price, and then the price could, shoot up and do a few other things as well. So guys, so that's the main live analysis session for today, where we wanted to discuss these things. So now the time is New York time 10 a.m. At the moment it's 9:57. So what we are going to do is we are going to wind up this live stream. We are going to wind up this live trading room, we are going to stop this session. But hopefully you all learn some really good insights of how professional pro traders look into the market based on volume profile and order flow analysis concepts, right? So let me show you one quick thing before we wind up the session. So if I go to the footprint chart, you can see over here, okay, again, if I come down, come back, you can see there's a huge wick play in this 30-minute candle, right? So if I look into the footprint chart of that, you can see it's that blue the blue histogram, the blue profile is dominant here, which means the buyers have been dominant. Now, even though the buyers were dominant, right? So these are aggressive buy entries, what you see here in the volume footprint chart. Even though aggressive buy entries were there, buyers were dominant, why the price made a wick? So if I go back, see, it made a wick. Why? That's the reason I explained earlier about absorption. So what has happened here is passive sellers silently absorbed all those aggressive buyers, and aggressive buyers got exhausted, and then the price came down, right? Because when the buyers get exhausted, then the price will definitely come down. Again, the reason is, as I said, if you look at the left hand side, 7 days ago, there's a high volume cluster, that is sellers are defending the price. Okay guys, so hopefully it was a very insightful session for you guys, and hope you guys enjoyed this session and add value to your knowledge. And let's meet you again in another live session, live stream. In the meantime, look at the other videos in the channel as well, and make sure to grab the free course and enjoy it as well. Okay friends, so let's wind up the session very soon, right? Let me check a few things. Okay, give me a second on this. Okay, while I'm talking, the price is pushing down now. See, red candle has started, right? You guys can have a look at this for a little while, what's happening here. So aggressive sellers are pushing the price down. You can see aggressive selling happens, selling. Have a look at this for a little while as well before we wind up the session. Okay, let's just give it a little bit of a time to see what's happening over here. Price is pushing down, guys, because as I said, the price is reacting to a high volume cluster formed 7 days ago, right? Aggressive sellers are pushing the price down. Excuse me. Price is pushing down, so hopefully price will come down and tag the entries and give you a winning trade. Okay, so price is pushing down, guys, so it could come and grab your entry now. However, there's bullish fair value gap, but it's that's where we have placed the entry as well. Let's wait for a little while and see what's happening. The screen will go blank, don't worry about it. You can see me at least, even though the chart is not there, okay? But I'm here. Okay, so what's the price doing? So it came down, but it's still not pushing down. I'm just waiting to see what the price would do next. The screen will go blank, don't worry about that. So let's look at the smart DOM. What's happening here? The buyers and sellers are fighting. So what we will do is, as I said, I just wanted to just check what's happening, but it may take a bit of time for the trade to develop. So you got all the knowledge for today's session, and you got all the levels. So which is the most important thing. So if we just keep the live stream on, it's just, like we are waiting for the trade to play. But we don't need the live stream for that. So we can stop the live stream now and see what's happening. And hopefully, fingers crossed, this will be a winning trade. So we wish you all the best, and take care, guys. Okay, let me just check one thing. Thing should be fine. Okay, wish you all the best for everybody.